Let's talk about how to pay yourself as an LLC. For those of you that have started or who are planning to start an LLC, a limited liability company, you may be wondering exactly how you are supposed to pay yourself. Making sure that you do this properly is incredibly important because you do not want to trigger an IRS audit or other problems in your business. Before we get started, I want to make sure you understand that I am not a CPA or a tax professional. It is extremely important that you consult with a CPA or a tax professional with regards to any financial planning for your business. This video is going to specifically focus on paying yourself as a single member LLC. First, we need to identify what an LLC is. An LLC is a limited liability company. This business entity structure offers both the protections of a corporation for those business owners that want to protect their personal assets, then they may choose to convert into a limited liability company. Because there are these different ways that you can set up your LLC, there are also different payment methods that you'll need to comply with. As a single member LLC, you can be taxed one of two ways, either as a disregarded entity or as an S-corporation. A single member LLC that has not completed a form to be treated like a corporation in the eyes of the IRS is called a disregarded entity, and the LLC's activities should be reflected on its owner's federal tax return. First, let's talk about those of you who are single member LLCs. You did not fill out that extra paperwork in order to elect S-Corp status. The method that you're going to use to pay yourself as a single member, not S-Corp LLC, is going to be called an owner's draw, also referred to as an owner's distribution. The first step in doing this the right way is going to be to make sure that you have completely separated your business finances and your personal finances with completely separate accounts. Your business is going to take in the payments and sales money into your business checking account. In order to do an owner's draw or an owner's distribution, you are simply going to do a transfer from your business bank account over to your personal account. Now, this can be done anytime in any frequency and in any amount. There's no limitations in terms of how many transfers you can do or any regulations in terms of amount of transfers, frequency, etc. Doing this is very simple, but you have to make sure that you have separated your business and personal accounts because you do not want to trigger an audit. A limited liability company also grants you the ability to elect what is called S-Corp taxation status. Electing S-Corp taxation status means that you and your business are no longer one and the same, that you and your business are now separate taxation entities. So why would someone elect S-Corp taxation status? Well, when you are taxed as a sole proprietorship or as an LLC that did not claim S-Corp status, then you are required to pay self-employment tax. Self-employment tax is 15.3%, which covers Medicare and Social Security. Entities will be taxed this 15.3% on their total profits from their business. Now, once a business chooses to elect S-Corp taxation status, they complete a form and make the transition. That means that they will no longer be self-employed. Instead, they are going to be an employee of their own business. Because their business and themselves are no longer taxed as one and the same, the owner must then enroll themselves into payroll. This eliminates the requirement for your business to pay self-employed taxes on that total profit. Why? Because as an employee of your own business, you are going to be on payroll. Payroll will be subject to payroll taxes. Therefore, self-employed tax will not apply. Therefore, self-employed tax will not apply to the total profit of the business, but rather will apply only to the portion that you pay yourself as a reasonable salary. A reasonable salary is typically defined by most CPAs as about 30% or more of your total profits. This can essentially save you a lot of money on taxes. However, it doesn't make sense for every business to undergo S-Corp taxation status until they reach a certain point of profitability and predictability within their business. For those of you that have elected S-Corp status, you have completed that form to be taxed as an S-Corp, you are going to have a much different payment method. As an S-Corp, you are required to have yourself as an employee on payroll. You are going to need to set up a payroll system and pay yourself a reasonable salary. Most CPAs define a reasonable salary as at least 30% or more of your business's profit. You're going to hire yourself as an employee and put yourself on payroll. Now, if you do not have a payroll software, then the easiest way to put yourself or your employees on payroll is a tool that I love called Gusto. Gusto is an all-in-one payroll solution, and it's super easy to use and user-friendly. Use the link that I have down below in the video description, and it will send you a $100 bonus. Now, you are permitted to give yourself additional owner's distributions, meaning extra money from the business outside of your reasonable salary transferred over as an owner's draw. For those of you that are considering electing S-Corp status for your business, I want to make sure that you consult with a CPA prior to doing so to ensure that it is really the best decision for your business. Now, if you're paying yourself and earning money from your business, it is incredibly important that you understand how to plan for taxes. So I want you to click on this video next, where I cover 6 important things that you need to know about tax.